Alright guys, welcome back for another video. I want to revisit the idea of the weekly open. In the previous videos I've been mentioning how basically the weekly price action has just been testing the weekly open. You see that here, price tests the weekly open, rallies up, then you really just rally off the open right here, but then this close you get an open, test down, test the open, rally up, right here, come down, test the open, rally up. This one, really went below the open, but test the lows, rally up. And we're getting the same price distinction right here. Price is testing the open. But of course, we haven't seen it rallied yet, but we're a little bit far from the close at this point. But we can mark off the swing, within the context of this previous uh, candle's swing. So we got the open, and then price rallied up above the highs, ran liquidity above the highs, and then came down and tested the open right here. And that's where we're currently at in price action. This is a bullish formation right here. You can see, even when the weekly chart is uptrending like this, generally you do, these highs get ran, liquidity gets ran, you get a little bit of a pullback coming down, and then ultimately rallying further. But I just want to drill down and kind of look at this swing. Again, this area right here is roughly our weekly open. Not exactly, of course, but sort of right around that level. And I marked off a little bit of the intraday swings, not intraday, but the smaller swings within this, several day price swing. So you've got this high right here, price breaks above, breaks down below, then breaks above, tests up to that high, comes down, tests this high right here. Price comes up, tests that high again, comes down, breaks back above, closes above, tests down, tests right there, rallies up, comes down, comes to this level. You have this level right here where price is basing off it right here. You can see right there, comes up, tests it, comes down, breaks above it, comes down, tests it, rallies up. And then here you have a 618 retracement. Price, well, ultimately, let's see. Yeah, so you got your 618 right there. So price comes down, runs into the 618, runs up, does one last final distribution right here. And if you go down the RSI, you probably see divergence coming in. Yeah, so you get these multiple drives above, right? But the RSI is showing divergence as liquidity is being run. Then you get your final drive right here. Price breaks down back into the range, right? We had mentioned before that if you see this price distinction, it's generally a pretty bad sign for bullish continuation. If you see this thrust up, an impulsive move up above the highs, and then an immediate slam back right down, violating the lows that created that impulsive move. If you see that, that's generally a bad sign. We have this check mark here because price came off the 618, rallied to it perfectly, and then did this one last impulsive thrust high. But then when you see this impulsive thrust into the liquidity above here and then slam back down and violate these lows, then that is a breaker formation right here. That shows you, without going into too much detail about what a breaker formation is, it's roughly a swing failure pattern on a little bit of a smaller time frame than people generally would consider a swing failure pattern, but it's still very important, and oftentimes is the canary in the coal mine that you're going to get a little bit more of a retrace. And that's exactly what we saw here. You see this breaker formation come in. And again, it's not the absolute low, right? Price came a little bit above that area, right here, right here, right here, one last thrust. But when you saw this pattern come in, that was generally the sign that price was going to retrace a little bit. And that's ultimately what we saw here. Price is coming down into this level right here, testing off these highs right here. Again, this is not like a swing high, but these are price distinctions that do operate on price. If you were to go to a 4-hour chart, it'd be a little bit more obvious than even the hourly chart, right? Puts in that divergence. Let's see if we got divergence on the 4-hour chart right here. Yeah, so you do even on the 4 hour, right? Divergence, divergence, then price runs up, retraces down here, testing this level right here. Now we can go down on a 15-minute chart. If we were expecting, one of the reasons why this is such an important level is because of the impulsive price move right here, right? Some big players stepped in the market right here, push price up. Now the price is returning to that level where that impulsive price move came in. You know, are the market makers going to defend that level right there? Well, that's ultimately what, the level of interest we're interested in. And you know, basically, if you see something, price start to reclaim the highs on the lower time frame, that's generally a sign that the retracement is starting to unwind, and buyers are stepping into the market. So, if you see price comes down, reclaim this intermediate time frame low right, or excuse me, intermediate time frame high right here. That would be the sign that this is probably going to continue. And if you were to go to a daily chart, or a weekly chart, if you see that type of distinction, that's probably your initial sign that, okay, yeah, the open's going to get defended and prices, going to mount a little bit of a rally upward. But conversely, if that wasn't to happen, say, we don't keep defending the weekly opens, we start breaking down. Well, what we would generally see in this type of scenario, even if the swing ultimately breaks down, a lot of times you'll see price come down, react off that level. But then if you were to go to the 15-minute time frame, you could draw a 618 retracement right here. So price comes down, hits that level, rallies up into a 618 retracement. We'll go to the 4 hour. You can see that here. So you get a little bit of a reaction. But if this were to ultimately break down rather than reclaim this high right here, again, this is not, the word high is not a great description, because it really would only be a swing high in the 15-minute chart. But just for the sake of simplicity, this 15-minute high right there, once that's reclaimed, it's a little bit more of a bullish outlook. But if we were to break down, you would see this reaction into the 618, and then ultimately price would probably reach for liquidity below the swing low right here. So you'd see minor reaction, run up into the 618, then run down for 22666 roughly. Probably see a sweep of these lows right here, potentially a sweep of these lows right here, and a fill of this gap right here, this further inefficiency. So, and then then your window is just kind of expanding a little bit, right? You're going from the lower time frames up to the higher time frames, because really this distinction that we see right here with the volume coming in significantly is the same distinction that we see right here on the chart, right? If we were to go to the hourly chart, similar distinction, right? Your heavy volume buyers step in dramatically and pump up the price and then come down and defend it. Well, you have that same exact distinction right here, right? Only just in greater magnitude, right? Greater price move than this, which is a lesser swing within a greater swing. So the same concepts that we used here in this lesser swing could also apply even if this swing breaks down. And it's a good example of how price is fractal. So you have price swings within price swings within price swings. So your 15-minute chart, your 4 hour chart, your daily, your weekly, they're all going to interoperate with each other, and they're going to play out. The same patterns are going to play out no matter what time frame you're looking at. The only difference is that the magnitude of time that it takes for each individual behavior to play out. Like if you're looking at a weekly chart, that's going to take a significantly longer amount of time to play out than a 15-minute, right? That 15-minute swing is going to play out extremely quickly relative to a weekly. Again, so if price were to break down here, well, then that would start breaking the weekly structure. So I would actually get a little bit more bearish if that were to start happening, just because this weekly structure of defending the lows is would objectively be broken, assuming that we do get a close below this low right here. So mark that off at 22622. I generally upload a weekly close analysis video, and that would be an area that I've been looking at. If again, it's not the end of the world. Sometimes you can get a full body close below there, but and then ultimately get continuation. It's not incredibly uncommon, but it does happen. But generally, what we want to see, if we want to see the weekly continuous uptrend, is we just want to see the lows defended and new highs claimed. So now that the weekly is testing the open, we'd want to see price rally off the open, make new highs, and continue this trend. Yeah, so I hope you guys found some value in this video. If you guys did find some value, just please make sure to subscribe to the channel, leave a like on the video, and I'll catch you guys in the next upload.